An ISA, or individual savings account, is a way of saving without paying tax. Usually, when you save or invest money, you have to pay at least 20% of the interest you make to the taxman, not to mention capital gains tax. When you save in an ISA, however, the taxman won't get a penny. The ISA is a wrapper which protects your savings. There are two main types of ISA: cash ISAs and stocks and shares ISAs. Cash ISAs work in exactly the same way as other savings accounts. The only difference is that the interest is paid without tax being deducted. Stocks and shares ISAs are a little more complicated. As the name suggests, you can invest in individual stocks and shares, but also other investments such as funds or government bonds. Exactly what you're able to invest in depends on the ISA. If you get your ISA from a high street bank, for example, they will often restrict you to investing in their funds. It's important to understand the difference between the tax wrapper and the investments inside it. If you want complete control over what you're investing in, you need what's called a self-select ISA. The most you can invest in one tax year is £10,680. Of this, the maximum amount you can put into a cash ISA is £5,340, and then the remainder must go into a stocks and shares ISA. You can, however, choose to place the whole £10,680 into a stocks and shares ISA. When the new tax year starts on 6th of April, this limit is set to increase by inflation to £11,280. But you need to be aware that if you use up your allowance, then decide you want to withdraw money, you can't then reinvest it until the next tax year. For example, if you put £5,340 into a cash ISA, then withdraw £2,000, your allowance remains used up, even though you've only saved £3,340. In other words, you shouldn't treat your ISA like a bank account. It's designed for long-term savings. As with all good things, there are some rules. Rule number 1. You have to be over 16 to invest in a cash ISA and over 18 to invest in a stocks and shares ISA. Rule number 2. You need to be a UK resident. And rule number 3. You can only invest in one cash ISA and one stocks and shares ISA each year. Though with many ISAs, you can transfer investments made in previous tax years without using up this year's allowance. If you use up your ISA allowance each year, you can potentially save yourself tens of thousands of pounds that would otherwise be lost to the taxman. And unlike a pension, you can still access the money if you need it before you retire. But once the tax year ends, you've lost any unused allowance for good. If you're not sure what you should be investing in, Citywire Selection, our investment shortlist, is a great starting point.